Hello there, many thanks for joining us on this fresh edition of Business Week, the program that brings you top business stories that made the headlines during the course of this week, including special news features, market data, interviews, and much more. Here's the highlight of some of the biggest stories we tracked for you over the course of this week. Now, on the local front, the World Bank says increase in fuel subsidy puts the Nigerian economy at a high-risk level as subsidy payments could significantly impact public finance and pose debt sustainability concerns. And now, in terms of infrastructure development, after 17 years of its abandonment, the federal government says it is going to complete the multi-billion-dollar Brass liquefied natural gas project in Bayelsa State. And now, despite the increase in global oil prices for the third consecutive month, Nigeria's earnings from crude oil plunged by about 75.9 billion naira in February and March this year. On the international front now, Netflix Incorporation says inflation, the war in Ukraine, and fierce competition contributed to a loss of subscribers for the first time in more than a decade and predicted deeper losses ahead, marking an abrupt shift in fortune for a streaming company that thrived during the COVID-19 pandemic. Now, the company says that it has lost so far 200,000 subscribers in the first quarter of the year, falling well short of its forecast of adding 2.5 million subscribers. And in terms of some highlights from the Russia-Ukraine crisis, China imported 321,380 tons of liquefied natural gas from Russia in the month of March, steady from the same month last year despite a steep fall in the country's total imports of the fuel due to high spot prices, according to the Chinese customs data. And still staying with the Russia-Ukraine crisis, Russia's top producer Rosneft has issued a rare tender to sell to Asia prompt cargoes of Sokol crude exported from Sakhalin fields, according to local sources, a sign of urgent sales as its supplies pile up. The producer offered three 700,000 barrel cargoes for loading on May the 7th to 10th, 14th to 17th, and then May 27th to the 1st of June. Well, it's about a time where we bring you special packages prepared by our correspondents.
This gathering, which includes traditional rulers, is to give out seeds for grains, including rice and maize, to beneficiaries in parts of the country. The traditional heads who serve as a direct link to the people are given certificates of allocation for the hybrid seeds, which are most relevant to their community's needs.
Nigeria has to move forward. And in order for us to move forward, we have to think about the masses, the citizens, the poor people, the orphans, the widows, the disadvantaged people. Those are the people that makes up the country, not just the 1% or the 5%.
The recipients are expected to plant and harvest the produce from the seeds for consumption. Women have been past beneficiaries of this gesture in times past, and it is now being expanded to reach more people.
We are going to target those that are in need, those that are really hungry, the orphans, the poor people that really needs the seeds. Those are the people that will get the seedlings first. Now, the Royal House or the Royal Highnesses, they have actually picked out the people that will receive these seeds when they get the seeds. So this seed will not be a political seed. I'm not a politician. I really don't care about the politics. All I care about saving lives.
Well, it will help a lot because, in this Nigeria, we probably need these kind of things. How to create a foundation to help the poor masses so that they can do their agriculture and gain from it back.
This time around, she has made it much better. And we in my chiefdom, we have decided to choose two items that we shall fight hunger with it, rice and maize.
The community leaders who are glad about this initiative are sure it will bring about the needed boost for agricultural development.
These efforts are geared towards supporting the authorities in their various interventions aimed at ensuring food security in the country.
Stakeholders of the country's trade supply chain are present at this forum. As deliberations center on why substandard goods are still making inroads into Nigeria's market, despite efforts by the Standards Agency to tackle influx of inferior goods into the country.
The point of this gathering is to make sure that we try to sensitize each other on what we look out for. When we take products that are substandard, we are not doing it to spoil anybody's business. We are doing it to protect your business and protect the people you are bringing the products to.
They say the trend is unsustainable and is weakening the local manufacturing industry and poses a great danger to the citizens and the country's economy.
As freight forwarders, licensed custom brokers, we should not be involved in dishonesty in our declaration, such as concealment, inaccurate description of imports and exports, in order to circumvent the procedure, which are all impediments to achieving ease of doing business.
The problem is, when you bring substandard goods into the country, you sell them, our local factories, our local industries are destroyed gradually. And if they are destroyed gradually, it doesn't matter if you have $10 billion. You cannot drive that car in your town or in Lagos or in Kano, anywhere.
The agency warns that Nigeria cannot survive with the influx of substandard goods imported into the country, adding that it is killing the nation's economy.
And now it's time to bring you the feature on the show today as we take a look at the state of the economy, assessing the latest inflationary pressure and report for the month of March as released by the National Bureau of Statistics. Thank you very much for still staying with us. Let's now deal with the crux of today's discourse. The Consumer Price Index, which measures inflation, increased to 15.92% on a year-on-year basis in the month of March this year. The National Bureau of Statistics disclosed this earlier on Friday in its latest report titled Consumer Price Index March 2022 Report. It explains that the percentage reported was 2.25% points lower compared to the 18.17% recorded in March last year. On a month-on-month basis now, the headline inflation increased to 1.74% in the month of March, and this is about 0.11 percentage points higher than the rate recorded in February, which is pegged at about 1.63%. The urban inflation, on the other hand, the rate increased to 16.44% on a year-on-year basis in March, and in the same vein, we also saw rural inflation increase to 15.42% in the month of March, with a decrease of 2.18% from the 17.6% which was recorded earlier in March 2021. Similarly, now the composite food index rose to 17.2% in March compared to the 22.95% recorded in March 2021. The agency blames the rise in the food index on increases in the prices of bread and cereals, food products such as potatoes, yam and other tubers, fish, meat, oil and fat, and on the all-item less farm produce or core inflation, which excludes the prices of volatile agricultural produce. The highest increases were recorded in the prices of gas, garments, cleaning, repair and hire of clothing, shoes and other footwears, clothing materials and other articles of clothing and clothing accessories, liquid fuels and also lubricants for personal transport equipment and other services and respective personal transport equipment. Well, joining me now virtually to discuss this and much more, I have Sam Chidoka, the Managing Director and Chief Executive Officer of Kairos Capital Limited. Thank you very much for joining us on the show today.
Okay, thanks for having me.
Now, Nigeria's inflation increased to 15.92% on a year-on-year basis in March. And on the month-on-month basis, the headline index increased to 1.74% in March. This is about 0.11% higher than the rate recorded in February this year. What do you make of the pattern of inflationary pressure that we've seen so far the first quarter of this year versus the spike we've seen recorded in the United States, England, China and Japan amid the global disruptions we've seen, the latest Russia-Ukraine crisis and its ripple effects on the world economy, really?
I'd say that for Nigeria, we expected a spike in our inflation. However, you have to situate it with where we've been and where we are right now. We already had inflation at over 15%. And so we expected that there would be a movement in inflation. However, we didn't expect that you would see the kind of movement you would have, say, in the US or in the UK as in Nigeria. So you recall that in a place like the UK, inflation is now at 6%. Even with the spike, inflation is still single digit. However, we already have inflation at double digit. Post-COVID, inflation rose as much as 18% in Nigeria. We saw a deceleration to around 15%, and we've seen a recent increase to last month, leading us 15.9, almost 16% in inflation. And that's driven by the war in Russia and Ukraine, and by the fact that there's been a spike in the price of crude, which ordinarily should be good for Nigeria because we are an exporter of crude. But remember that we are also an importer of refined products. And so we saw a spike in the price of diesel from around the 300 naira range to over 700 naira within the last 1 month. And that in itself puts inflationary pressure on the economy. And so, yes, we've seen inflation increase in different climes. We expected it to increase in percentage terms more in the US, in the UK, and most of European countries than in African countries where you already had high rates of inflation. And so what we have seen in terms of inflation was not unexpected. I dare say that, in my view, I thought we will cross the 16% mark in March because of what we saw with the increase in price in diesel, increase in price of food items. And you know that food is has a huge impact on our CPI. And we saw increase in price on food items that we import from Russia. And then the insecurity in the country also affected the food basket in the country. And so I thought that inflation would be higher, but so it was not unexpected.
Okay, now, the Russia-Ukraine crisis has definitely exacerbated the inflationary pressure on global food prices, especially affecting wheat import and other products, and for oil and gas imports as well. Yes, the food inflation for the country remains at double digits at 17.2%, which is quite worrisome. But however, are you not surprised at a smaller margin of increase of 1.99% comparing it to the figures from February? Most analysts had predicted a bigger margin of increase, especially on the back of the fuel scarcity, power issues, and then gas price increases. What are your thoughts?
You're correct. Some analysts would have expected a quantum leap in food inflation, especially. However, we must remember that inflation is a lagging index. So when the inflation figures that has come out is for March, some of the things you mentioned happened in April. So we're going to see the inflationary pressure of some of those things in April. So what has happened to food inflation in Nigeria is you're going to continue to see double-digit food inflation in Nigeria as long as we have insecurity, the herders and farmers clashes that we have all over the north, some parts of the north and the middle belt part of the country, which essentially is the food belt of the country. As long as people can go to farm, then you're going to have food inflation at double digit. Also, you're going to continue to experience double-digit food inflation because of the Russia-Ukraine war. We import quite a bit from Russia. We import also from Ukraine. And most of what we import is raw materials for production of food. So we import wheat, which we use for bread, which we use for some of our feed meal for some of our animals as well. So all that is going to put inflationary pressure on food in Nigeria. Did we expect it to be higher or the spike to be higher? Well, I didn't expect it to be higher because, like I said, some of the things that we're looking at have actually happened in April. It will be interesting to see the inflation figure for April sometime next month. I reckon we will see an uptick in inflation as well.
Okay, now let's also look at the bigger picture from a monetary policy direction. The MPC took the stance of retaining rates in the first meeting of this year. To what extent do you see this influence the inflationary pattern until the next decision-making timeline, and what's your forecast for the month of April and then the overall second quarter for the year?
Leading to the last MPC meeting, I was one of those that had the view that there was no need to have a knee-jerk effect. I felt MPC needed to hold rates where they were, because remember that we're dealing with a lot of things in the country. Whilst inflation is one of the things that the MPC has to look at, MPC has to also look at capital formation, the cost of capital in the nation. So when you hike your base interest rates, that's going to have a domino effect on pricing of debt instruments and capital formation in the country. If you ease, it's going to have effect on inflation. Also, we're dealing with unemployment. I remember that we have pretty much high unemployment, 33% unemployment, another over 20% underemployment. If you sum them, you have over 55% thereabout unemployment and underemployment, with over 40% youth unemployment. So you've got to deal with all those things. You need the economy to be productive. You need to allow companies and individuals to be able to raise financing and raise capital. And so the cost of capital becomes important. So in as much as you find that in some other economies, we've seen rate hikes to sort of counter the effect of inflation, I didn't think that Nigeria needed to do that immediately because of the domino effect it could have on other things that we've been dealing with, i.e. Capital formation, unemployment, exchange rates, and all of those things. So I think that for MPC, they've taken the right decision to hold. They have enough time to appreciate what has happened and how that's going to affect the economy leading to the next MPC meeting. And after that, they can decide what to do at the next MPC.
Okay, now let's also move a little bit, looking at the picture from a bigger lens. Now, over the last 2 decades, fiscal deficit has remained a predominant occurrence. Nigeria's fiscal deficit for last year was pegged at 6.45 trillion naira. This year's is about 7.35 trillion naira, which government is forecasting, and other analysts are also pushing for a 8 trillion naira benchmark, considering the amount of money the NNPC is demanding for fuel subsidy. How problematic would you say is the provision of subsidy, for which has increased 9-fold to about 4 trillion naira, because this also adds to the volume of debt? How much we see things also increasing our spending?
Well, I just say it's very problematic, but I like to say that remember that we don't have subsidy payments, we have under recovery payments, just to be clear. But you and I know that we're talking about subsidy. At 4 trillion naira over a budget of about 17 trillion naira, it means that you're spending somewhere around 24% of 25% of the budget on subsidy alone. Now, that's not sustainable. Even the World Bank have just sent out a report advising Nigeria against fuel subsidy. And it's clear that it's just not sustainable. Fuel subsidy is you're subsidizing consumption. We're not subsidizing production. And if there's anything we need to be subsidizing, we should be subsidizing production. We should be subsidizing healthcare. We should be subsidizing education. But we definitely should not be subsidizing fuel to this quantum. I dare say that, yes, there will be inflationary pressure if you were to take out that subsidy. I dare say that, yes, it would affect cost of living. But these things have a way of normalizing. Remember that when we argue about fuel subsidy and the poor needing fuel, I dare say that what the poor really need might be kerosene, and kerosene has no subsidy. I dare say that what affects almost everybody would be diesel, because for most companies that are into manufacturing, the fast-moving consumer goods companies, they spend a lot on diesel, and they also pass on the price on their finished products to everybody. And for those who are manufacturing products that the poor in the society tend to consume a lot, they pass on the cost to them. So I do not think that we need to have this huge fuel subsidy. I make the argument that you can subsidize transportation without subsidizing fuel. If you want to provide cheaper transport for the poor, you can do that. But I don't know why a man who owns 5 cars needs subsidy. He might as well let go of some of the cars. I don't know why a man who drives an SUV that is a fuel guzzler needs subsidy. The fact that you can afford that car means you can afford to buy fuel. So I dare say that, yes, the fuel subsidy is not sustainable. It's going to continue to be an overhang over our economy until we grow the political will to remove it. We can't subsidize transportation by providing cheaper buses, removing tariffs on bus importation, giving soft loan to companies that manufacture buses in Nigeria. We can subsidize transportation, but you don't have to subsidize fuel.
Okay, now lastly as well, to manage through the inflation that we have to deal with at this point in time, we definitely need to look at cutting the cost of governance. Do you think we have any chance at slimming the cost of governance? Nigeria really runs one of the most one of the most expensive governments in the world. The Revenue Mobilization Allocation and Fiscal Commission has already been at the forefront of calls for a reduction in the day-to-day cost of governance and then the expenditure which government takes on. What do you make of the calls for a merger of ministries, departments and agencies performing similar and overlapping functions to reduce the cost of governance and overall really just make political offices less attractive when the political season as well?
Short answer, I would say no. We haven't shown that we have the political will. The Orosanya panel report or committee report on merging and shutting down some of the duplicity that we have in agencies, in ministries and departments and agencies of government has been gathering dust for a couple of years now. And even with change in government, we haven't seen the political will to make it happen in taking a decision that needs to reduce the cost of governance. We haven't seen it. In 2020, I remember that the federal government did announce that they saw over 20,000 ghost workers within the federal civil service. I think I read a report recently that Niger State alone got a report of over 7,000 ghost workers. So there is the issue of ghost workers and corruption, and there's the issue of just high cost of governance in terms of overheads different from salaries. For us to reduce those, I think the first thing that needs to happen is that there needs to be openness in terms of how government accounting is done. So you gave an example that Ghana wants to reduce from 12%. The question is, what percent do we have in Nigeria? What's the percentage of other expenses vis-a-vis our total expense? I'm not talking of salaries, I'm talking of other overheads. There's some form of opacity with how we handle our government finances. So I'll definitely say that the first thing we need to do is to provide clarity in what is. And then we can begin to monitor and determine how we want to reduce that. You can't reduce what you don't know. So my first recommendation is the use of technology to whittle down issues of ghost workers. Secondly, we need to drastically drive down the cost of governance, which is pretty high. And we need to go back to the Orosanya report and just apply it. But I think that we've been lacking in the political will. And I dare say that in this season of politics, I doubt we'll see it materialize soon, perhaps later.
Thank you so much for your time on the show today. It's been a pleasure speaking with you.
Thanks for having me.
Well, just before we go now, here are graphic details of the cooking gas price watch for the month of March this year, as prepared by the National Bureau of Statistics. That's it on this edition. Many thanks for watching so far. I'm David Alabi. Do enjoy the rest of your weekend. Bye for now.